The Dow closed above 13,000 yesterday. It's up today. Is it sustainable?
Well, I think one of the reasons why I like this one, and by the way, we could lump in the NASDAQ at 3,000. The reason why I think it's sustainable is very important. It's the valuations. Things aren't expensive. Now, a lot of people say, well, wait a second. Carl Quintanilla was batting back and forth this morning. We didn't have a lot of earnings beats. I'm not as concerned about earnings beats and earnings momentum as I am about the idea that we're making highs without stretching valuations. But go back to 1987. We started getting 28, 29 times earnings. And so that was an unsustainable rally. Go back to 2000, 1999. We were beginning to get 40, 50 PEs on NASDAQ, not sustainable. Here we're getting 12, 13, 14 with good dividends, sustainable. That's
and
sustainable.
What multiples would you look at for this rally to kind of top off?
I think you go from, what you see is that there might be some shrinking multiples. I think the General Millses of the world, Proctors, they could go back to 15. But then you see the Caterpillars go up, the Verizons go up. And, look, let's not forget, Bernanke's speaking, and he's not raising rates. So I keep trying to think, how long can AT&T stay at 30 with that 5+ yield and good cash flow? How long can Verizon stay at 38? And I think the answer is not very long. I think these can still have big moves. Wow. Don't forget, if Bank of America, if we begin to get loan growth, JP Morgan can go to 50. We've been buying JP Morgan for action alerts. Bank of America, which I really can't stand, can still go to 10. IBM, you're talking about earning $15. Why can't that be a $300 stock, out 2 years from now? So I see a lot of stocks that are underpinned by decent fundamentals that are not going to get hurt that badly by Europe, would do very well if China cuts. And if we continue to have employment growth, we'll do very, very well.
Now, all these positive things are happening, but the money's still flowing into bond markets.
Yes, and that is, talk about something that's positive. You'll have all these surveys that show there's a lot of bullishness, but money talks and that stuff walks. And when I see the money coming out into bonds, I know that has to reverse. And I know it has to reverse higher than it is now, because you don't wake up one day and say, I just put money in the bond market, now I'm going to put it in the stocks. That's gravely misplaced buys. And I think even with dividend tax changes, because a lot of that money may be tax-free. And I think that that's the fuel that will take us after people recognize what's going on. Can we go appreciably higher? I think we add a couple multiple points. That's the way. And we're going to have multiple expansion on higher earnings. If we were just having multiple expansion, then we're back in 87 and 2000. If you just had higher earnings, it's a bear market, because that means no one's willing to pay up. We could have both, and that's a very positive scenario.
Making it much more of a stock picker's market.
I like that.
All right, thank you, Jim.